Hi everyone, let us solve problem number 4 of cost of capital. Here they given Masco Limited wishes to raise additional finance of 10 lakh rupees for meeting its investment plans. It has 2 lakhs 10,000 rupees in the form of retained earnings available for investment purpose. Debt to equity ratio was given 3:7. Cost of debt is up to 1,80,000 rupees 10%, beyond 1,80,000 rupees 16%. Earnings per share 4 rupees. Dividend payout was 50% of earnings. That means total earnings per share 4 rupees. 4 into 50%. Expected growth rate of dividend 10%. Current market price per share P0 is 44 rupees. Tax rate 50%. Here they ask to find out determine the pattern for raising the additional finance. Determine the post tax average cost of the additional debt, that is KD. Determine the cost of retained earnings and cost of equity. Determine the overall weighted average cost of additional finance, that is WACC. Let's solve the problem. Here the problem is pattern for raising the additional finance. Given required finance is 10 lakh rupees. So the given debt to equity ratio is 3:7. So total finance is 10 lakhs. On that finance, debt amount was 3 by 10, that is 3 lakhs. Equity is 10 lakhs into 7 by 10, 7 lakhs. Capital structure will be total equity amount will be 7 lakhs minus 2 lakh 10,000 is retained earnings. So 4 lakh 90,000 rupees is equity. Retained earnings they given in the question 2 lakh 10,000 rupees. Debt up to 1 lakh 80,000 rupees 10% debt. So 1 lakh 80,000 rupees. Beyond 1 lakh 80,000 16% debt. So total debt was 3 lakhs. Reduce 1 lakh 80,000, then 1 lakh 20,000 will be the additional debt. Total capital structure was 10 lakh rupees. Then find out cost of additional debt. KD on 10% debentures I into 1 minus T. I interest is 10 into 1 minus tax rate was 0.50. KD on 10% debentures is 5%. KD on 16% debentures was I into 1 minus T 8%. So average cost of debt will be 1,80,000 into 0.05 plus 1,20,000 into 0.08 by 3 lakhs. It will become 6.2% average cost of debt. Cost of retained earnings and cost of equity both are same. So D1 by P0 plus G. Here D0 means current year dividend. EPS into dividend payout ratio 4 into 50%, 2 rupee. Dividend current year paid. So KE is equal to 2 rupees for current year into 1 plus G0.10 growth divided by 44 rupees plus 0.10. KE is 15%. Next, calculation of weighted average cost of capital. Source was equity including retained earnings. Amount is 7 lakhs. Debt 3 lakhs. Weights are 7 lakhs divided by 10 lakhs 0.7. 3 lakhs by 10 lakhs 0.3. Cost of capital, we find it 15 percentage and 6.2 percentage. Weighted average cost of capital means weight into cost of capital, so 10.5, and for the cost of debt 0.3 into 6.2, 1.86. Total weighted average cost of capital was 12.36. Thanks for watching.